Hey, Pastor, this is Larry Spear with Solomon Financial Resources. I wanted to thank you for sitting in on our Pastors Only webinar. And we're going to talk about, I believe, some interesting things for you today and for maybe some of the folks in your church. Solomon Financial Resources is partnered up with an organization called Your Family Bank out of Florida to put on these services, and we wanted to give everybody full credit. So this is me. I'm Larry Spear. I recently retired as a full-time pastor at the end of December, and my focus, sorry about that, my focus going forward in my ministry is to help churches and pastors and Christians deal with some of the financial issues that face all of us. Part of what we do. Here's our mission statement. We seek to enhance the individual member financially through financial education. That's really what we are. We're educators, leading to proper stewardship in order to strengthen the local church, thereby furthering the gospel of our Lord and Savior Jesus. It's the Church Legacy Ministries, which is an arm of Your Family Bank, was founded by a fellow named Larry McLean down in St. Augustine. His whole business, Your Family Bank, began in churches. So he has a great heart for Jesus and Jesus's people, and we're pleased to be part of what they do. So it's a couple of things I told you that when we started. You'll see this in the email that I sent out. Here's the world that we live in. There's 44 million Americans hold a little over $1.4 trillion in student debt. We got about $1 trillion in credit card debt. We have a bunch of us have medical debt. We hold $8.8 trillion in mortgage debt. You see the deal. 1.2 in auto loans. Truth is, the average American household collectively owe $13.15 trillion. That's about $250,000 per household. And just an editorial comment, debt is killing our families, and it's restricting our churches. Focus on the family. James Dobson's ministry says that finances are the number one causes of conflict in a family, and they say finances are the number one cause of abuse in the household because of the pressure that it puts people under. So, can we be honest for just a minute? Now, I want to talk to you just a minute, pastor to pastor. And so give me just a minute, and then I'm going to take you through a little bit more of a traditional overview of how we work. The first thing is that God's people are just being squeezed by their finances. You know, we live in a consumer society. We hear what God says about money, but somehow we have a hard time putting that into play. You know, we at one level we know we're not owners, we're stewards, you know, and all of that which you teach from your pulpit. But the truth is, advertising tells us we need it, and we need it now. And if we don't have the money, then they teach us that we just need to go out and borrow it. It's just an epidemic, and people can't support the work of the church because they can barely support their own home. And I get it. The spiritual answer is, well, they ought to put God first and then take care of things after that. In some places that works, in some places it doesn't. So I guess my pitch here is that if we can help them get their personal finances in better order, the church finances will be in better order. So the second part that I just need to say, and I don't want to cross swords with anybody. I don't want to name names. I don't want to call out. But the truth is, most of the solutions that we teach in our churches just don't work. They're great. They're great Bible studies. They're great small group curriculum. There's truth all in them. Applying what they teach is biblical, and nothing wrong with any of that. So please don't hear it differently. But the truth is, the system that's taught to get out of debt doesn't work, because none of us want to eat rice and beans and put our credit card in a block of ice and live like hermits. And so part of what we've done is created a program that allows people to get out of debt because they want to, and still maintain the kind of reasonable lifestyle that they want to live. Now, make some changes and all that, but just sit tight with me. But I need to get that out in the open with you. Going to the bookstore and ordering literature and putting it into play in a small group just historically has not worked. So anyway, got that out of the way. So what we do is we teach a 7-step approach. When we put this into play, we teach people to live within their means. We teach them to get completely out of debt. We teach them strategies for a comfortable retirement. While retirement is not necessarily a biblical concept, it is one that sooner or later we can't work as much as we used to, and we can't serve as much as we used to. So we need to have some resources set aside for us to live. And then finally, if we free up funds to in those family units, then that supports the mission of your church, and more importantly, grows the kingdom. So we always start with these 2 questions, and we always do it because we want people to think. And so the first question is, are you 100% sure you're going to have a great retirement, or do you have some doubt? The second question is, if I can show you how to get out of debt in 9 years or less, including your mortgage, without having to spend any additional money than you're currently spending now, would you be interested in seeing how we do it? That's how we start every conversation. Okay? And so we do a little quick again. Remember, we're educators. Here's some education for you. The average American household lives on 23% of the income that come in the door. 40% goes to taxes, federal, state, sales, whatever. A third of it goes to interest payments, mortgage, Visa, Discover, Belks, whatever. And then typically we're saving about 3%. And again, we talked about it. The average household debt's about $250,000. Using our family bank approach quickly, we try to kind of change the pie and the slices in that pie. We try to show them how to reduce taxes, how to reduce their interest, and our ultimate goal is to take that to zero. If we can do that, then we've increased our savings and we have freed up money to make lifestyle decisions in the future. So I'm not going to go nit by nit with this on you, but I just wanted you to see the 7 steps and how we proceed. The first step is about information, but we share knowledge. Knowledge becomes power when you put it into use. And then we do, that same question again. How would you feel if we could teach you how to reduce the amount of interest, get out of debt in 9 years or less, get better cash flow, decrease your taxes, save for college if that's applicable, and retire with tax-favored income? And that's how we start. We talk about the game of life. We all go into the game of life in different ways, but a lot of commonality. Go to school, we get a job, we buy a car, we go in debt, we meet our significant other, we get married, we go in debt, we together buy a house, we go in debt, we have kids, we go in debt, now we need a bigger house and car, we go in debt. You got the picture. We've all been to that party, and most of us are still somewhere along that path of the game of life. The average American household goes through $2 million worth of income by the time they reach 65. That's a staggering number. But more staggering is that by the time they get 65, they have saved about $60,000 that they've tucked away for some sort of retirement. That little pile of money and Social Security is not going to make for a very comfortable life. Second step we talk about is cash flow. You know, if you can track your money, you can control your money. And for most of us, this is the big issue that gets us into trouble to start with. We have absolutely no idea where our money goes. I tell the story all the time. You go to the ATM on Monday and you get $100 out. You stick your hand in your pocket on Thursday and there's $20.12, and you've got absolutely no idea where that money went. So part of what we provide for our folks is a spending plan worksheet. We don't call that a budget because in America the word budget is a four-letter word. But again, these are, if you can get a couple to sit down and do this, this is an eye-opening experience. And we try to get all of our folks to sit down and make an effort to do that. We also remember part of why most of the get out of debt programs don't work is that they fail to account for this issue. 80% of our planning needs to go for our long-term events, stuff that we know is going to happen. But the truth is we have always got to tuck away a little bit of money, and we think it's an 80-20 rule that you need to be tucking away 20% for emergency and emotional spending. You know, the tire's going to go flat, the air conditioner is going to go on the blank, and most Americans are, you know, they're a paycheck away from being broke. And so we want to try to help them make sure that they stick a little bit of this emotional and emergency money aside. And yes, pastors, we do, you and I, have emotional spending just as everybody else does. Ours just may be different, right? Our spouse may go to the mall and buy new shoes or clothes for the kids. You and I go to the pro shop and see that new tailor-made driver or that new shotgun or that new deer stand or that new study stuff that we like to buy. Again, it makes us feel good, and it's just part of life, and we need to account for it. Okay. Basically, we show people how a bank works, and it's different from how we work, but it tells us how we get into a little bit of jam financially. Is we take $1,000 to the bank today, put it in the bank, don't even get a toaster anymore, but they'll pay us 1%, maybe 2%, maybe, but they turn around and then can put that money back out 7 different places, and you go back in tomorrow and want to borrow $1,000 after you go through all that paperwork and scrutiny and want to know how you're going to pay it and what you're going to do it for. They'll loan that money back to you somewhere between 2 and 24%. Pretty good business. Then we talk about debt. This is kind of what gets us to talk to people, and so we help focus on this as much as we can because it's the key. If you want to have more in the future, the easiest way to do that is to reduce the debt today. And so reducing debt is the way to increase wealth. If you go to stockbrokers or financial advisors, their answer for having more money, you know, in your future is give me more money, we'll put more money to work, and therefore you'll have more money. Well, they don't even consider the fact that if you had more money because you weren't so deep in debt, then you were able to give it to them. And so what we try to do, first step, is we try to minimize the red numbers so that we can release that cash flow then to be able to put it into something that can increase their their wealth. So we always do this, and this will give me just a few minutes, but I think you'll see where we go with this. We do this with every person we sit down with. We tell the Mark and Joyce story. They're kind of a typical American couple. They're young. You can read this, so I'm not going to read it to you. But they're a young couple, got 3 little kids, hadn't done any planning for college. They want to retire at the American dream of 65, which may or may not happen going forward. They make pretty good money. They're making about 80 grand a year, or about 70 grand a year, and they're tucking away a little bit of money. They are interested, because we always ask these questions. What are you interested in trying to take care of in the future? And I don't know how to stop those pop-ups, so sorry. Oops. Well, you can tell this is a live thing, can't you? So anyway, we walk them through those kind of questions, and then we try to take them in through we take a look at where they are currently financially. They're ahead of most of us. They got a little emergency fund of $6,000 at the Bank of America. They're putting $25 a month in it. They do have a little 401k over at Fidelity. They got $36,000 over there, and they're making a $300 a month contribution. Okay, that's good. So then we take a look at their debts, and they give them to us, and I'm, again, not going to read them all to you, because we want to keep this as tight as we can. They're averaging about a 10% interest rate on the debt that they owe. You add up all of the balances over here, including that mortgage, it's $180,000, and they're paying $2,177 a month in payments toward those debts. So at this point, we stop and always ask the question, well, how much does Mark and Joyce owe? Well, the majority of it, and this is how Mark and Joyce answered it, the majority of us think they owe $180,000, because that was what's on the sheet. But the reality of it is their real debt's $380,000 because of all the interest that they're going to have to pay on top of that debt for the next 30 years. And so we stop a minute and just tell them, you keep doing what you've been doing, you're going to keep getting what you've been getting, and you owe considerably more money than what you think you do. We do kind of take a quickie peek at their retirement plan, and we've already talked about that. So if they keep doing for their retirement side what they're doing today, they'll have about, based on those criteria, they'll have about $408,000, $409,000 in the account. But what they most of the time forget is that Uncle Sam owns 25% of that money because they're in a 25% tax bracket. And yeah, I know people tell you, yeah, but when you retire, you'll be at a lower tax bracket. Not really. The tax bracket's based on how much income you're living on, not how you earned it. And pastors, do you think taxes in the United States are going up, going down, or stay the same? Well, when you recognize that 82% of every dollar that comes into the federal government goes to Social Security, Medicare, and Medicaid, and we still fund all that other stuff we do, you get an idea. Sooner or later, we're going to have to pay for all that stuff. Anyway, so let's take a look at what we did for Mark and Joyce and what we can do for people using the family bank concept. Here's what we did. We freed them from their lenders in 7.8 years. We go to the model here, get them completely out of debt in less than 8 years. We saved almost $123,000 worth of interest. We freed up $2,177 a month. Remember, they were paying $2,177 a month to pay the bill, to pay their debt. By the time we paid it off, now they've got $2,177. They can do whatever they want to do with it. Now, they had interest in retirement, so in this example, we put it into a retirement place for them. And if they did that, at the end of 30 years, they'd have a little over $1 million. Truth is, That's their cash flow. That money may go to college education. It may go to buying a new house. It may go wherever. But it's money that's freed up for them to be able to live how they want to. Okay. Hopefully, they'll help us with some of the stuff that we want to do. All right. So again, you saw the deal. Their current plan, they had that. After we're done with them, they got that. And then we do remind them that you don't have to do a plan like this. But if you don't do a plan like this, what does it cost you? Well, in this case, it's going to cost them about $800,000. The loss in the cash flow and the interest that they would have to pay if they keep going the way they are. We do talk a little bit about taxes, and I kind of beat on that just a little bit ago. But the less tax you pay, the more you keep. I believe as an American and as a Christian, we're supposed to pay Caesar what's due to him, but I don't believe we're supposed to pay him any more than what's absolutely due to him. So we work diligently to kind of help folks minimize how much tax they have to pay. And we talked about this, but I didn't have the little dials before, so you get the idea. We briefly talk about risk. You don't want to lose a lifetime of work, out of something that's outside of your control. And there's a lot of risk out there. We've already talked, taxes are going up, the market fluctuates. If you got money in the stock market, it's a roller coaster. We were coming off 10 pretty good years where the market's been up. It was down a little bit last year. But we forget that in the last 20 years, the stock market has gone 50% or so lost twice. Twice stock market has left its investors holding it. Again, stock guys will tell you, well, you get in for the long haul and ride. That's great unless you're getting ready to retire in the next year or two when that market loses 40%. But anyway, enough of that. Inflation is out there. Well, there's no inflation. Well, how much did a gallon of milk cost you today versus a gallon of milk 5 years ago? Certainly emergencies and all these other things are out there. I live in Savannah, Georgia. Savannah, Georgia is the home of Morgan & Morgan. And we'll sue you for anything, bless your hearts. And so you got to just be protected. So where we're going to is that we want to help a family sit down and do a big picture plan. If you don't know where you're going, you can't get there. I can get out here on I-95, the corridor between the Northeast and Florida. I get out there doing 100 miles an hour, great traffic, making great time, and everything is wonderful unless I'm trying to get to Texas. So part of what we try to help folks do, and we do this, pastors, for churches, we can do it for individuals, we can do it for businesses, but to help them create a big picture. And if we do this right, we argue less about money, we find some money that we're just wasting. We increase our cash flow, and we increase our savings. We get out of debt, and on and on. Okay. So again, quick reminder is that we always take them back to here. Here's the Mark and Joy story. We're all in this story somewhere. They think they're in $180,000 in debt. They're actually $380,000 in debt after they put their big picture plan into play. We freed them from lenders in 7.8 years. We saved them almost $123,000 in interest. We freed up $2,177 in cash flow, which in our example we put into retirement for them. And at the end of that, we'll have a little over $1 million. Okay. And then we take them here and we say, okay, by the time most people see this, they immediately make a decision to be like Mark and Joyce. And then we ask the simple question, would that include you? And people always say yes. And then so we help them make a decision. And so what we do with everybody we sit and talk with is that, okay, if we can find a big picture plan that's just right for you, designed for you, not too big, not too small, not too hot, not too cold, would you want to take a look at it? That's our big close, right? And then they almost always say yes, and then we take them through what do we need to do. Well, we have a data sheet that we use. In that data sheet, we say, look, Mr. Prospect, Miss Prospect, we need to get personal here just a minute. All the information that we gather is personal to you. It needs to be accurate. It needs to be truthful. We deal with it as it is without any judgment, so don't feel funny about any of that. I don't need to know your account numbers or your PIN numbers, but we need to gather some information, okay? And then so what we do is we're going to gather the information, we're going to run some reports, and we're going to create your big picture plan, and then we're going to come back and go over it together. Does that seem fair? And then we gather them, we sit down and gather the information that they have on hand, and then there'll always be stuff that they don't know. So what's your mortgage? Well, it's this. And well, how much is the principal and interest? And what's the interest rate? And how many more years do you have? It's those kind of questions that we gather. Sometimes they know. Now that we carry most of that stuff on our phone, we get most of it. And then we say, great, you have a homework assignment for us to be able to complete this for you accurately. I need this information. Take a piece of paper. Here's what you need to go find out for us. That ought to take a couple of days. So today's Thursday. And why don't we, how about if I call you Monday? That'll give you the weekend to kind of get it all gathered up. Can you do that? Yes, I can. Great. I'm going to call you Monday and get this information from you. So when I call you, what's going to happen? And they're going to give you the information, right? You're just trying to make sure you help them have some incentive to get it done. And then we go, great. We'll call you on Monday, get the data. That'll give us a few days to input and run the system. How about if we just get together a week from today? And maybe the same time that we're meeting today, does that work for you? Great. And then we finish it up with, so remember, we're not buying anything. Let's go ahead and get that off the table. The next time we meet, you're not going to buy anything. So you don't have to worry about signing nothing. You don't have to worry about buying nothing, but I'm going to show you the big picture plan. And again, the question is, if I can show you a plan that's just right for you, that's not too big, not too small, not too hot, not too cold, you want to look at it, right? And we just get an agreement and we put all that into play, okay? That's how we work with people, and I wanted you to kind of see that. We educate, we turn over some issues, help them turn over some issues that sometimes they don't want to see and look at. Truthfully, pastors, we expose some lies that we have been conditioned to believe, in our culture about money, about debt, about interest rates, Here's one I'll leave you, and then I won't do it today, but I'll get you to think about it. What interest rate are you paying on your mortgage if you have one? It's not what you think. Here, I'll spoil the teaser for you. If you go out and get you a mortgage today for $300,000 and at 5% interest, you think you're paying 5% because that's what they told you. And then when you go to make that first payment of about $1,016, give or take, and when you look at where that money gets split, part of that money goes to interest, part of that money goes to principal. When you look at the numbers on an amortization schedule, your interest rate that first 10 years is above 70%. The second 10 years, it's above 60%. So, how they teach us that it's only a 5% interest is an interesting thing. And so we talk about that. We talk a little bit about the fallacies of some of the investment things that we get talked into with 401ks and IRAs and stuff. And anyway, we are ultimately what we do is that we try to educate, we try to help, we try to show, and then if we can implement with them, we do. And that's kind of how we work. Okay. So for us pastors, what's our next step? Well, number one, we would love to do a big picture plan for you. I think that that as a family, this is probably something that would be useful to you. Even if you don't have a lot of debt in your life, it's worth doing, because then you can. Yeah, it might be very useful for you, but at worst case, you'll see how it works on a very personal and upfront way, and then you can know that you can trust the system. The second thing we can do, we would love to come in and schedule a time with you and come in and share a seminar similar to this with your folks. I mean, we have 3 or 4 different versions of the seminar. But the get out of debt one will draw a lot of people from within your church. But Pastor, if we promote it a little bit into your community, it will draw it'll draw guests to you to come in and hear something that's of interest to them, and then you'll have an opportunity to invite them back to church. And then certainly the next step, we'd appreciate it if you would introduce us to others. And our story is telling the story, and sharing what we do. So if you want to take any of those next step, or all of them, that's how you get a hold of me. That's me, Larry Spear. That's my personal cell phone number, so you can get me. That's my email address. And if you want to go online and calendar some and match our calendars up, you can do that with that online calendar that you see there. So again, I kept it to a little bit longer than 30 minutes, so that's not too bad. But I just want to end this thing, pastors, by telling you that we appreciate you. Because Steve Sanders, who's also is the founder of Solomon Financial Resources, he and I are both pastors. We know what you go through. We know what it's like trying to lead your family and lead your flock, and do the best you can to represent them to God and God to them, and we thank you for that. We pray for God's blessing on you today. We pray for His wisdom and His grace, and that God will speak to you, and that if He speaks to you about how we can help you and your church, we'd love to have a conversation with you. Again, thanks for coming, and thanks for sitting in here with us. Whatever we can do to help you, we feel this is our ministry, and want to help you do what we can. So you have a good rest of the day. Thank you for being here, and if you have any questions or just want to talk, you can see there how to get a hold of me. God bless you, brothers. Bye-bye.